We do have a steady supply of buyers in the stock market. Also, apparently, you are one of them, but only in select spaces. And there are some oil and gas names that you actually kind of like.
We do, Brian. And there was years where energy names here in the United States were very, very laggard, underperformers. But as of late, you look at the way these companies are pivoting into a greener space, a more socially conscious space. We've been adding to Chevron for the past few years, and boy, has it turned out to be a good investment, not only from a profitability standpoint, seeing share prices appreciate, but also from a dividend standpoint. And I think as we move forward, dividends become so important. And within the energy space, there's certainly lots of opportunities. Not every name is going to be a company you want to invest in. With a tightening environment that we're headed into, we've got to look at profitability and valuations. But if you stick with best of breed, I think you can do very, very well.
Yeah, we've talked to the CEO of Chevron lately, Mike Wirth, and he said it's about fiscal discipline. We're going to give our money back to shareholders. I know you probably got to like that. Best in breed also in the banks, many would say would be Jamie Dimon at JP Morgan or Goldman Sachs, two other names that you like. Why?
Yeah, I think for the same reason. If we head into a rising interest rate environment, Brian, you've got to check off the box with financials. Sounds easy. Everyone talks about it. But if you're looking at valuations, if you're looking at earnings, if you're looking at profitability, and especially with those two names, if you look at dividend growth, very, very powerful. Quality is subjective. It's a word we throw around all the time. So I think we need to get away from that. Really look at profitability, valuations, earnings growth, and dividend growth. It's a common theme throughout the whole portfolio. But best of breed, I think, makes sense, especially in an environment where we get off of a zero interest rate trade. You can't just buy anything. You can't speculate on anything. Valuations will matter tomorrow more than ever before.
Yeah, and I was reading the notes, Kevin, because not like I just plucked these names out of thin air, by the way, even if our viewers think I do. I do not. And I read the notes and saw you were a buyer of Cisco, and I did a double take. I'm like, Cisco, not a name I've heard a lot about. It's kind of been left out there in the trash heap of tech, but you like it now. Why?
We like things when they get beat up. Is it buying when there's blood in the streets or good things happen to cheap stocks? When they came out with earnings, they bashed the company. Again, thinking of rising earnings, thinking of dividends. It's an old school tech name if you still want to call it that. But the reality is, I think we're up 8 or 9% since that drop after earnings. And this is a name that will give you and lend itself to a little bit more quality. There's some big names out there from a valuation basis. They've gone, like a meteor to the moon. I loved what you said about Apple as far as it being a utility. And I was kind of thinking the same thing as you were talking about it earlier. We own Microsoft. We own Apple, best of breed. But sometimes when you get into a world like this where everything isn't going straight up, you've got to really look for value. Cisco is one of those plays.